Welcome to This Explainer. Today, we're jumping right into a massive milestone for Arista Networks by breaking down their Q2 2026 results. Known for their software-driven approach to cloud networking and that foundational EOS architecture, Arista is really showing us how the global AI infrastructure build-out is driving some absolutely incredible financial growth. We're going to explore exactly how their specific hardware innovations, which are deeply rooted in a culture of engineering efficiency, are directly translating into unprecedented revenue. Let's get into it. All right, let's just cut right to the chase and look at the headline number. Arista's Q2 2026 revenue came in at $3.036 billion. That is a massive 37.7% jump from this exact time last year, and it marks their first ever $3 billion quarter in company history. Just to give that a little more perspective, it's also a 12.1% increase just from the first quarter of 2026. Growth of this magnitude, especially at this kind of scale, is exceptionally rare, and it really signals a major shift in how the industry is spending on infrastructure. So you've got to wonder, right? How exactly does a networking company pull off that kind of explosive growth in just a single year? Well, the answer lies in a major strategic pivot, specifically what they call their Arista 2.0 platform strategy. They realized early on that modern data centers were fundamentally changing. It wasn't just about moving standard internet traffic anymore. It was about preparing for the most data-intensive workloads human history has ever seen. Arista CEO Jayshree Ullal absolutely hit the nail on the head here. She noted that customers now see networking as the central nervous system for infrastructure. Arista's hardware isn't just connecting computers anymore. It's the indispensable central nervous system powering the massive data demands of the AI boom. Think about it. AI models require thousands of GPUs talking to each other simultaneously with basically zero latency. If the network bottlenecks, the AI grinds to a halt. Arista has positioned its tech as the critical infrastructure, making sure that doesn't happen. And man, when you look at the growth visually, it's pretty striking. Seeing that revenue jump from $2.2 billion in Q2 of 2025 to over $3 billion in 12 months, is just undeniable proof that the Arista 2.0 strategy is really resonating. You are literally watching the AI infrastructure build-out happen in real time right here in these revenue bars. Companies aren't just doing routine upgrades, they are aggressively scaling up to handle next-generation workloads. Let's shift gears to our first major theme. Section 1, AI networking, the catalyst. To really get what's driving this, we have to talk about their new 1.6 terabit AI fabric platforms, like the 7060 XE7 series. When we say AI fabric, we mean a networking architecture built entirely from the ground up to maximize how efficiently AI clusters operate. These new platforms deliver up to 100 terabits per second of system bandwidth. That is an insane amount of raw pipe, but it's exactly what's required to keep modern generative AI models fed with data. Arista is leaning heavily into this, optimizing networks for AI, and even engineering liquid-cooled options. Because let's face it, when you're pushing this much data, the hardware runs incredibly hot. Seriously, some modern AI server racks output as much heat as a commercial pizza oven. By offering liquid cooling optimized for scale-up, scale-out, and scale-across networks, Arista is directly solving the physical and thermal limits of today's most advanced data centers. Now, here's a real game changer. Power is arguably the single biggest bottleneck in the whole AI revolution right now. But this is where Arista's knack for elegant, highly efficient engineering shines. By using linear pluggable optics in their new Etherlink platforms, they're cutting interconnect power consumption by a staggering 60% compared to traditional methods. For data center operators who are literally maxing out their local power grids, that is absolutely huge. And all this hardware innovation is translating into serious corporate dominance. I mean, they just hit the 2026 Fortune 500 list, and they're partnering with heavyweights like Anthropic and Palo Alto Networks to secure AI systems against advanced threats. Plus, being named a leader in the 2026 Gartner Magic Quadrant for enterprise, wired, and wireless LAN proves their single architecture approach is just winning the market. They aren't just a hardware vendor anymore, they're a foundational pillar of modern enterprise IT and security. Okay. Let's look at the numbers behind the strategy. Section 2, diving into the financials. Let's anchor this narrative in some hard, undeniable data. Looking at the condensed consolidated income statement, we see a massive 40% growth in non-GAAP earnings per share. And gross profit for the quarter? It's sitting at an incredible $1.91 billion. That shows some seriously impressive supply chain management, especially when you consider the complex realities of building state-of-the-art 1.6 terabyte hardware. If we slice up that $3 billion revenue pie, you can see exactly where the cash is flowing. Physical hardware products absolutely dwarf their service revenue, bringing in over $2.6 billion on their own. While $430 million from services is definitely healthy, it is crystal clear that the physical nervous system hardware is the engine driving Arista right now. Customers are just eagerly buying up the physical infrastructure they need to support their future compute demands. And when we look at profitability, the numbers are strong across the board. Diluted EPS jumped significantly year over year, whether you're looking at the GAAP or non-GAAP metrics. To give you some context, back in Q2 of 2025, GAAP EPS was 70 cents and non-GAAP was 73 cents. Seeing those jump to 95 cents and $1.02 respectively is almost a 40% increase. It proves that this massive top-line revenue growth isn't coming at the expense of their bottom line. They are scaling highly profitably. Of course, understanding how we get from GAAP to non-GAAP is vital for anyone following the financials. Reconciling these two accounting standards helps us filter out the noise of certain non-cash expenses, giving us a much clearer view of their core operating performance. So if you're wondering what actually makes up that gap between the two numbers, the primary driver is just over $120 million distributed in employee stock-based compensation. This is super common in the tech industry to attract and keep top-tier talent. When you back out that non-cash expense, along with some intangible asset amortization and tax benefits, you arrive at that higher non-GAAP EPS of $1.02, which really shows us the actual cash-generating power of their daily operations. So what's next for the company? Section 3, looking ahead to Q3. Spoiler alert, Arista isn't slowing down. They're officially forecasting approximately $3.3 billion in revenue for the third quarter of 2026. This tells us that the momentum we saw in Q2 wasn't just some one-off spike or a single massive customer order. The demand for their AI fabrics and enterprise gear sustained, and management clearly has deep visibility into a very strong pipeline for the rest of the year. And it's not just about that top-line revenue target. They're projecting incredibly healthy non-GAAP operating margins right around 48 to 49%, proving that this AI network strategy is wildly profitable. Maintaining nearly 50% margins while aggressively building next-generation hardware, that is a hallmark of Arista's notoriously disciplined corporate culture. They're even forecasting earnings per share to grow further, targeting between 106 and 108 for Q3. So, as we wrap up this explainer, I want to leave you with this thought. If we truly are just at the dawn of the AI revolution, we are witnessing a multi-year infrastructure build-out unlike anything in history. And if networking really is the central nervous system of that revolution, how much further can Arista's growth accelerate?